Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today we're going to take a look at two brand new covered call ETFs on the US stock market. So again, these are ETFs that are listed on the American stock market. It's going to be GPIX, that's the stock symbol for the first one, GPIX. This is the Goldman Sachs S&P 500 Core Premium Income ETF, as well as GPIC GPIQ, which is the Goldman Sachs NASDAQ 100 Core Premium ETF. So like you probably already guessed, these are index-based covered call ETFs, and they're actually what I feel are really important and worthy competition to the undisputed king, JEPI and JEPQ from JP Morgan, right? So obviously JEPI is going to be a competitor for GPIX because that's more S&P 500, and JEPQ is going to be more the competition for the GPIC because it's more the NASDAQ. So let's do a review of these two ETFs. We'll try to figure out what they're all about and how they really compare to JEPI, JEPQ, and what their performance has been thus far. So they both came out at the end of October, so it's only about 4 months that they're out, guys. And I always like to review new ETFs after I see at least 3 months of distribution. So I know there's a lot of new ETFs. The US market is exploding in terms of income-oriented covered call or options ETFs, but I will only do the review after at least 3 months so we can get a good sense of the yield and things like that. So let's take a look at GPIX. First of all, what you will see is, it's not really a hard one to comprehend. There's not a lot of details. I even dug deep into the prospectus, but the first thing we will see is the first three distributions. So right now, the dividend yield based on the last distribution, which was 31.5 cents. This is monthly. Everything has monthly distributions here. These two ETFs as well as the JP Morgan one. So you see that the yield is 8.22%, and the three distributions are actually very close, very similar, which is great for if you're living off of something, for example. Whereas if you compare it to JEPI, the yield is currently 6.34, but that's based on the last distribution, which was only 30 cents, one of the lowest. Yeah, we can't really say, JEPI is always going to have a 6% yield. It varies, but so far it looks like the distributions of GPIX are a little bit more stable versus JEPI, and the yield is also looking like it's going to be a little bit higher overall. So in terms of strategy, a very, very important covered call strategy, there's very little. I'm in the prospectus here from in the Goldman Sachs prospectus, and they don't even say if they're out of the money calls, at the money calls. When it comes to the coverage ratio, they say that the overwrite level, that's just fancy word for on how much are we writing the covered calls, blah, 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 is generally revised each month, and the fund expects that under normal circumstances, it will sell call options in an amount between 25% and 75% of the value of the portfolio. So they could cover anywhere between 25 and 75% of the portfolio. It's extremely vague. It's like such a big number. Maybe they've done it on purpose, and they also do not say, if they're at the money calls or out of the money, but I have a strong suspicion that they are probably going to be out of the money calls, which I'll explain why in a little later. It's when we look at the behavior of this fund. Also, they expect to sell call options on underliers that provide economic exposure to the fund's benchmark, which is the S&P 500, such as an ETF that seeks to track such an index, and not on securities of issuers including in such index and held by the fund. So they are writing call options, it seems, not on the individual stocks in the portfolio, but on, probably they're writing options on the SPY ETF or the VOO ETF or the IVV ETF, the big S&P 500 covered call. No, not the S&P 500 index-based ETF. So that's what they're writing calls on. Again, this website is absolutely horrendous. It's not great. But to me, guys, and one more thing, very important. The management fee is the exact same as JEPI. That's how I know it. They're really trying to compete with JEPI. 35 basis points, which is not a lot. But until the end of the year, they knocked off 6 basis points. So the total MER is 0.29% or 29 basis points compared to 35 basis points with JEPI and JEPQ as well. And that goes for the NASDAQ fund as well. But it looks like this deal or this waiver is going to be only until the end of the year. So lower fee for now, and then it's going to be exactly the same thing as JEPI, I'm assuming. Maybe they'll keep the waiver for longer. We don't know. So what's the difference, right? We saw there's 3 distributions. The yield looks pretty decent, 8% approximately. Maybe I'm expecting it to be a little bit higher than JEPI, but why? Why is it a little bit higher than JEPI? My assumption is the real difference between GPIX and JEPI is that GPIX has the whole S&P 500. JEPI does not. So JEPI is actually a stock picking fund. They don't have the entire S&P 500, and I believe this is why it's been underperforming other S&P 500 covered call ETFs. If you just click on the portfolio, you see right off the bat number of holdings, 133, not 500, and some of those 133 are those equity linked notes. So if you look at the top, stocks, you're not really seeing, I'm sure Apple and Microsoft are there, but it's not index based. Market cap weighted, like a regular market cap weighted S&P 500 index ETF, whereas the Goldman Sachs ones does seem to have the entire S&P 500, and it is market cap weighted, which means the bigger companies are going to have the bigger share in the portfolio, right? You see here a very, very classic or basic S&P 500 mix. So it looks like you have, Microsoft, just by looking at the top 10, you could pretty much see that it is market cap weighted, which means the bigger companies will have a bigger percentage. So this is actually closer to the S&P 500 than JEPI is. And that's why, and also because of the fees a little bit lower, I think that's why right now the yield is probably going to be a little bit higher with GPIX. And you see that here at 8% versus the current 6%. But JEPI is usually about 7.5. I mean, this is really based on the last distribution. So you could say maybe this is an exception. Usually it's much higher than that. I think JEPI is more around 7 to 9. So maybe a little bit more yield, or let's just say very similar yield, guys, to JEPI. The biggest difference is the management fees a little bit lower until end of the year with this one. And it has the entire S&P 500. That is really the two main differences that I could see here compared. And if we do a total return comparison, and yes, I know it's only been 4 months, but right now GPIX, it's not surprising to me, is outperforming JEPI by quite a bit. And I really think it's because JEPI does not have all the S&P 500 stocks, whereas GPIX does. And what's been exploding lately is the technology, the AI stocks, and I think you'll have more of those in GPIX than in JEPI. That's probably why GPIX is going to outperforming, and in my opinion, probably will outperform. So I kind of see JEPI as a defensive S&P 500 covered call ETF. Because they're stock picking, they're taking stocks that are more defensive. I mean, it says so, and I even talked to Hamilton Rayner about this. And you could clearly see that, it's not the entire S&P 500, it's more the defensive stocks, I believe. I mean, if you look at the sector exposure, you'll see that technology is 14.5, not your typical 20, 29, 30 in a regular S&P 500. So in my opinion, that's really the main difference. Now, when it comes to GPIX and NASDAQ 100, this is a little bit more close to JEPQ. So it's basically the same thing, guys, same strategy, same fee, same everything, except the yield is of course going to be a little bit higher because it's on a NASDAQ 100. It's more volatile, so there's more implied volatility. You're going to get a little bit more yield. You see that actually, the 3 distributions, 37 cents, 38, 39. So a yield of about 10.19% right now based on the last distribution, whereas JEPQ, based on the last distribution, which is lower than usual, is only 7.74. So I kind of expect GPIX and GPIC to probably have a little bit more yield than the JEPI and JEPQ. And if we do a total return comparison between GPIC and JEPQ this time, it's actually a lot closer. But GPIC has the advantage once again, but it's really, really, really tiny compared to JEPI and GPIX. And I think the reason why is because I believe JEPQ is a lot closer to the NASDAQ 100 than JEPI is to the S&P 500. You see, obviously we know there's 100 stocks, and you see 96 holdings. Of course, this includes the equity linked notes, so maybe there's 80, 85 holdings or companies out of the 100. So this is more close, in my opinion, to the NASDAQ 100 index than JEPI is to the S&P. If we look at sector exposure, you see information technologies 41, NASDAQ is usually about high 40s or about 50. So again, the GPIX, what's the main difference? If we look at the holdings, this is actually, I would say, the NASDAQ 100. It holds the NASDAQ 100, whereas JEPQ does not really, has most of it, it seems, but not exactly. So there's a little bit more technology exposure in the GPIC, right? Because it's pure NASDAQ 100. And also, if we do the comparison, it is outperforming, but not as much. That's the reason why I think as well. So all in all, guys, two I would say very important ETFs to know and learn and understand and keep track of if you're an American investor, especially, or if you're Canadian and hold these in an RSP. JEPI is very, very popular. It has over 30 billion in AUM. JEPQ has over 10, but it looks like, in my opinion, they do have some very legitimate competition now with these two ETFs. I know they're newer, and you might say, well, they haven't really proved themselves, but I think that's a nonsense argument. As long as you understand what they do and the strategy, that's what's important. I think the S&P 500 and the NASDAQ 100 have proven themselves for a really long time, so that's just the way I see it. So really, really hard and tough competition, in my opinion, for JEPI and JEPQ, because it seems like a little bit lower fee for the rest of the year. Plus, they actually do have the entire index, where the JEPI and JEPQ don't really have the entire corresponding indexes. So very interesting. Make sure you keep an eye on it. These are, of course, going to be in my list of ETFs that you could very safely live off of. Right, it's in that magical 10 to 15% range, even less for the S&P 500, but maybe it'll go up when volatility rises. You got a little bit more, of course, yield with the NASDAQ one. So very, very interesting. I really like these ETFs. Unfortunately, Goldman Sachs did not respond to my request for a Q&A, but it's not rocket science to understand these just by looking at them and looking at the fee and how they work. They're very, very close to what JEPI and JEPQ does, except they are the entire index, which has been helping them lately, as you could see with that outperformance, especially with the JEPI and the GPIX, where it's a little bit, GPIX has a solid advantage. So make sure you keep your eye on these. These could be good to hold in tandem with JEPI. Maybe you could swap your JEPI for a GPIX. Same thing for the JEPQ. Maybe you trust JP Morgan. There's no which one is better. Don't ask me that, because that's something you can never answer. So in my opinion, these are fantastic ETFs that you should definitely know about and keep your eye on and consider as core positions if you're an American investor. And of course, if you like investing in the US listed funds as a Canadian in your RSP or LIRA. So that's it. Tell me what you guys think about these ETFs. Do you think they will outperform JEPI and JEPQ in the long run? Will you stick with JEPI and JEPQ just because of they have the track record? Let me know what you think, and thanks for watching. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.